Hello, I'm Sarah Rundell from Treasury Today Group, and in this podcast I'm joined by members of Standard Chartered's European Transaction Banking team to discuss why the latest EU Single European Payments Area Network regulation is important and what it means for corporate treasurers. SEPA allows businesses with bank accounts within the Eurozone to send and receive payments in euros. SEPA is designed to make sending money between European countries as easy as making bank transfers within the same country, and seen as key to accelerating trade. The EU recently updated its instant payments regulation so that SEPA payments must now be settled in under 10 seconds, 24/7, 365 days of the year. The legislation also introduces verification of payee, VOP, for added security. It goes to show how Europe is setting the global standards for instant payments, but it also comes with complexities and has highlighted the fact SEPA adoption has been slow. So, welcome Richard Stansbury, Head Product Management in London, and Felix Orth, Director Cash Product Manager, who joins us from Frankfurt. Welcome both of you.
Thanks for having us. Great to be here today.
Thank you very much.
So can we start by setting the scene and you both giving us some background to this latest regulation and explain why it's important? Felix, can I start with you there?
Yes, when we talk about the instant payment regulation, one thing that is relevant and needs to be mentioned is that the SEPA Instant Payment Scheme has been around for quite some while already. The first banks introduced SEPA Instant Payments in November 2017, early 2018. But since then, the adoption of SEPA Instant Payments somewhat mixed in the industry, somewhat scattered, and hence the legislators decided to mandate its adoption in the first step in Eurozone countries to further drive adoption of SEPA Instant Payments. What's also noteworthy is that the Instant Payment Regulation not only mandates the support of SEPA Instant Payments, so banks in the industry being able to send and receive these transactions within 10 seconds. It further introduces a new service, which is called verification of payee, which is essentially a name IBAN match functionality, which allows payers to verify the submitted beneficiary data before making a payment. And you get the response. The IBAN and the name are matching, not matching, close matching. Additionally, the Instant Payment Regulation introduces price harmonization between SEPA Credit Transfer and SEPA Instant Credit Transfer, just to mention a few of these additional aspects, I would say, that are covered under this regulation.
So, Richard, Felix mentioned that the regulation is a consequence of instant payments adoption being slow and that regulators want to speed up the adoption. Can you talk a little bit about why else this legislation is important?
Thanks, Sarah. And I think it's really important to note that really this is about giving a card-like experience to account payments. I think that the legislation is framed from the perspective of trying to incentivize the acceleration of payments, incentivize banks, payment service providers to evolve and to create card-like experiences on an account-to-account payment. I think also with the evolution of verification of payee, as Felix was alluding to, it helps to create a safer environment within which we can accelerate payments, giving particularly consumers and corporate clients greater confidence when stepping from payments that settle within 2 or 3 hours to 10 seconds.
Okay. So are banks ready to settle SEPA payments instantly? And what are banks' key concerns and priorities? And could you, Felix, talk a little about how Standard Chartered is meeting these requirements to enable it to support its clients?
I think banks are ready in the Eurozone when it comes to SEPA instant payments. The adoption rate is approaching 100%. I think if you look at the latest numbers that are published by EPC, the European Payment Council, they're around 92% when looking at Eurozone countries, which is, of course, great news. And this was achieved despite a broad, significant piece of legislation, as well as a relatively tight timeline to implement all this for the industry. For us, this was actually positive. Having a tight timeline to implement this, and obviously this being a regulatory requirement, helped us, Standard Chartered, as a large international bank, to get the required change the schedule internally against other competing initiatives and got it delivered on time. Also, Standard Chartered already had been live with SEPA Instant payments on the receiving side since September 2023 and since October 2025 in accordance with the regulatory timeline. We offer sending SEPA Instant payments as well as the verification of PE service to our clients. Generally, 2025 was a big year for banks bringing significant improvements to their client base. There was not only instant payment regulation, but it, for example, also marked the end of the CPPR Plus coexistence phase for cross-border payments. And we at Standard Chartered succeeded in tackling this book of work and now look forward to continue to bring the benefits to our clients in Europe.
You're right, Felix. It was a big year. And Sarah, if you don't mind me saying, it was a tough process for us. Our team did a brilliant job to be able to bring these developments forward for our clients. But mandatory compliance is only part of it. I think when we look at the instant payments regulation and what we've been asked to implement, as an international bank, we always try and look for opportunities across our global customer base to see how we can bring forward new propositions that are going to benefit corporate treasuries in all of the markets that we participate when they're looking to transact into Europe. I think that real-time payments are just a part of the overall real-time treasury story. And really what that is about is the evolutions of near real-time information exchange, API-enabled interfaces that are sharing information with clients faster, helping treasurers to make more informed decisions quickly. I think for Standard Chartered as well, we are a significant provider in the business of banking banks. And what's exciting about instant payments in Europe is that there are evolutions coming at the moment on how one leg out payments from outside of the Eurozone are able to settle on an instant basis. And these are really important evolutions. We think that they're going to help achieve the G20 objectives for fast and frictionless payments.
Yeah, it's exciting stuff, isn't it? So, Richard, can I ask you now, what kind of demand are you seeing from your corporate clients, and how is the bank promoting adoption amongst corporate clients?
Yeah, I think the uptake for instant payments across the industry for corporate clients has lagged. And typically, when I speak to corporate treasurers, they're not quite sold on all of the opportunities that real-time payments can provide them. There are some edge cases that we often work with clients on, particularly around insurance claims. So when a cash payout is needed for storm damage factory, or someone's lost their roof or something, perhaps delayed disruption on travel, particularly flights. I was caught in Frankfurt airport recently when there was some unexpected snow in the middle of winter that resulted in the airport closing. Flight disruption payments were being paid via real-time payments. And remembering the point we were making before around a card-like experience, I think the dream here is that at some point in the future, we're going to be able to use SEPA Instant real-time payments for point-of-sale transactions. So for corporate clients, being able to collect at a till at a point of sale and release the goods in exchange for the incoming real-time payment is going to be really important. And what drives that journey for corporate clients is real-time reporting. It's APIs that are delivering information really quickly, pinging backwards and forwards between their bank and their ERP, sharing information with richness of all of the transactional details as fast as we're able to make possible. These are some of the journeys that we think are possible today and will gradually gather pace. There's a couple of other examples too. I think when you think about treasury management and being able to move funds across the region later in the day, SEPA Instant gives us the ability to move money outside of standard RTGS or T2 cutoffs. So moving money later in the day, I think, could be benefiting if you're cash concentrating as well. So real-time treasury isn't just about real-time payments. We keep coming back to this point, and I think it's really important. Near real-time account balance and account information and transactional information is really what's going to drive treasuries of the future. It's about being able to give treasurers more information later in their day to help them manage overnight cash balances, making sure the right cash is in the right place at the right time. And the flow of information is what's driving that. It's not just about the payment.
What about the readiness of corporate treasurers? Could you share your insights on the potential sort of frictions or challenges for corporates here, maybe around if corporates can implement super fast payments with their current payment systems? Felix, where are the frictions?
Indeed, there are a few areas in which friction may arise. First off, I think it's noteworthy to mention that SEPA credit transfers are more likely than SEPA Instant credit transfers to be processed successfully because SEPA Instant requires instant reachability, real-time availability, real-time confirmation within seconds. And scheme participation is not yet universal. That means reachability in SEPA Instant is still evolving. Yes, for Eurozone countries, adoption has been mandatory since last year. Adoption rate is approaching 100%. But in SEPA, there are also EEA countries that don't have the euro. For banks in these countries, adoption only becomes mandatory in the next year. And then we have non-EEA SEPA countries where adoption is voluntary as long as there's no local national mandate that requires banks to join. So for corporate clients, this means they can't assume that every IBAN in SEPA is reachable in SEPA Instant just yet. Another potential source of friction is verification of payee. For retail clients, it's a great feature. Recently, I had to get my car fixed, and then afterwards got a bill with a larger sum that I had to pay. And before sending out the transaction via my online banking from my personal account, I got the feedback: yes, the account number is matching with the name. You're good to go. You're sending the funds where they need to go, and obviously this adds a certainty and a level of security. And I'm sure this is also something that people listening can relate to. For corporates, verification of payee means an additional step they need to consider in their payment journey. And it may require a change or added implementation in their ERP systems, or alternatively, there may be a process break as clients may have to log into a separate system to check and confirm verification of payee status. So it's a break in what's intended to be a highly straight-through automated process. However, there is the option for corporates to opt out of verification of payee for bulk transactions, bulk files. Also, verification of payee is a prepayment verification service that enables clients to validate account details before making a payment, which could also be at the time of vendor creation in an ERP system, which is an added benefit as well.
Oh, brilliant. Thank you so much. So just to wrap up this great discussion, you mentioned earlier future developments like one leg out payments, Richard. Could you and Felix just give some final thought on what lies ahead, what you're flagging to your clients regarding this space in the next 3 to 5 years?
Sure. And I think it's fair to say Instant's happening. It's happening everywhere in our lives, let's be honest, whether it's real-time notifications on our phones, whether it's real-time media, whether it's real-time payments and real-time treasury. The pace that technology is enabling the acceleration of information is exponential. And we're seeing that in payments today. I think if you bring that lens to activities that corporate treasurers perform in and day out, then we're going to start to see how the faster flow of information helps corporate treasurers to do their jobs day in and day out with more quality information more frequently, particularly around cash flow forecasting, positioning, etc. So we see that there is absolutely a directional trend there. I think regulation, Sarah, will also help to drive innovation. The upcoming payment services regulation and PSD3 will bring about even further evolution around open banking and account-to-account payments. So I did touch on this before, but we're very excited about the one leg out scheme and how SEPA will continue to evolve to be able to support transactions that start or end outside of the SEPA area. And the one leg out scheme is going to be a key aspect for how banks and payment service providers will help achieve the G20 obligations of faster and frictionless payments. And finally, of course, when we talk to clients, we always remind them of the importance of keeping their vendor master file, their vendor data up to scratch, and where possible, saved in structured formats. It sounds really boring, but the future evolutions that are happening in payments across ISO adoption in many, many markets across the globe and in cross-border payments themselves are going to be asking customers to be sending payments with beneficiary information in a structured format. It sounds so detailed and it's so boring, but it really helps to remove friction in payments by ensuring that we can put town name in a town name field, country in a country name field. Little things like this just add up on an end-to-end payment journey, and it helps when customers store their beneficiary information in a structured format like that. There's a lot ahead, and I think that's just the tip of the iceberg. And Standard Chartered's excited to be able to continue to bring innovative payment solutions to our customers here in Europe and across the globe.
Richard, thank you so much for that. Felix, thank you so much for that. What a great discussion.
Thanks for having us, Sarah.
Thank you. Brilliant to be here.
So you've been listening to Standard Chartered's European Transaction Banking team members, Richard Stansbury, Head of Product Management, and Felix Orth, Director, Cash Product Manager. I'm Sarah Rundell from Treasury Today Group. Thank you for listening. And if you'd like to hear more of our podcast episodes, please subscribe wherever you get your podcasts from.